Today we are going to be breaking down a trade that I took last week on 8th of April and on the 9th of April. Now both these trades coincided with each other. They were both headed towards the same target. I may or may not make a video on my DXY prediction and how that played out, what I was looking at for myself and for others, of course, for future reference, so that we know what we're looking for. If you do see this video, I believe Iran is going to war with Israel, so if you're looking at the gold price, beware. We may have a very big new week opening gap that may not be filled, similarly to what happened down at the 1800s level very recently before this huge rally on gold. It's probably a topic for another video, so without further notice and further ado, just going to get into the breakdown of what I was looking at, what I was seeing, why I took this trade, and why it spanned over the course of 2 days. So first of all, we're on the daily, so we're looking at our higher time frame narrative, of course, because you need to know what the higher time frames are doing so you can scale in, because prices are fractal. So initially we have a really clean fair value gap over here. So typically with a fair value gap, the top of the third candle on the fair value gap, or the bottom if it's bearish, will be liquidity. So almost like every time, you know. So we're gonna mark that out. So straight away, that's our liquidity point, right? Not only that, the strength of what you're using, the more confidences you have, whatever it is in, the higher probability that thing will have. So we also do have a mitigation block over here. We also do have a mitigation block right over here, this guy, which coincides right with our fair value gap and with this lovely big wick. So we can see that because Friday has closed actually even above the wick of the previous candle, this is another thing that's telling me that this high wants to be ran and that we are bullish. So whether it's a sweep or a run of this high, we know that price is going to be moving towards this high, so the only thing we're looking for is bullish setups in the market. Now if we drop down to the hourly time frame, we can see that on the hourly we have our fair value gap right over here, and we can also see that fair value has been offered in the market from these structural highs over here. So since now fair value has been offered in the market by this move down, which I believe was caused by news, I'm not sure exactly what the news event was, but I can see that, you know, fair value has been offered in the market, therefore there is no reason for there to be more selling, and that fair value has not been offered above these highs because it's only been selling over here, so we are bullish to this high. So then again, dropping down to the 15-minute time frame, we're just gonna let price play out, and then we will get into why I've took this trade, what I was seeing during the trading day, and so on and so forth. So even initially, actually over here, we do have this order block on the 15-minute time frame, which is actually not what I was seeing, because I took this trade on the 5 minutes, so we will be dropping down time frames, but 15 minutes just helps speed up the Asia session. So you can see there in the Asian session as well, again, we're breaking that structural high, we're closing above it. Another indication that we're bullish, internal break of structure. Not as strong as external, but it's still good. So we can see that on the open, London has come and tapped into this Asia fair value gap over here, took out liquidity that was resting above this high, and then we're going to be running into this low over here. So typically with Asia, one of the easiest setups you will ever find with the Asian session is just that you want one side of Asia to be ran, and then you can just target the other side and then enter on whatever entry model works for you. Is probably one of the more guaranteed things, as it were. It doesn't happen every single time, because sometimes, but like even if we look at this previous session over here, right, this Asia low gets swept and then we take out the Asia high. One of the easiest trading models in the world, and if you even want to look at it, you have your accumulation, you have your manipulation, and then straight distribution all the way up to the Asia high. So as price sells off and distributes towards the low, so now we're below the low. You see the immediate loss of velocity as we hit the low. If we drop down onto the 5 minute, we also see that a 5 minute fair value gap has been offered over here. Now you could have took this fair value gap, but for me, I'm sticking to a particular set of rules now, and since that this high had not yet been broken before the fair value gap had been offered or the fair value gap had been filled, that means I did not take this trade. So I did see this entry, but I did not take it due to I wanted this internal break of structure to confirm that I would have been, actually taking a valid fair value gap. So again, as well, what I was talking about with the confluences earlier, we do have this 5 minute fair value gap over here, which also aligns with this 5 minute mitigation block here. So that's extra strength to that fair value gap, which is what we like to see. The more confluences we can get on our fair value gaps, the higher probability they are. Now after this, we do eventually get the break off the high, which led to me taking this trade. It's right there, the break with confidence. The candle closed clearly above it. So then price came back, and you have to be so patient with price, really patient, because it's going to do everything in its power to get you out. So right here we can see that price has come down into this tiny fair value gap that we have over here, and actually it's not closed out of it, which is beautiful. It's exactly what we want to see. So I entered right there, and at the end of this entire breakdown I will be putting up the picture of the MetaTrader, just for everyone to see, so they know I really took this and I'm not just shouting out of my ass in hindsight, So now we can go back in the 15 minute and just let this run until the next session. But yes, that is the reason behind taking the trade. We've already got our targets. We know that the higher time frame is bullish. We've seen that buy side liquidity has been taken out. They're trying to run buy stops. They're trying to get people out of the market. So we know that they're trying to actually run in this direction. There's just being loads of liquidity sweeps. They're taking money out of the market, so people are getting out of their positions so they don't make money. Another thing I just want to quickly go over right here, and you can backtest this yourself. You can maybe try and find other examples of it. But a lot of people, one of their confluences is this is usually actually only on, I haven't seen anybody talk about it in regards to the S&P 500, the Nasdaq, and the US 30, but they always talk about on those indices as SMT divergence, which is similar to divergence if you've ever seen that on the RSI and the MACD, But these lows over here, if you go on GU, these lows over here will be inverted. So we already had our liquidity sweep of this low over here on EU. If you go and you look at GU, the liquidity sweep at this low at 10 o'clock had not happened yet. So instead you got your liquidity sweep over here before New York session. And I think that's something that you guys should definitely have a look at, because these two pairs, they're really similar. They're damn near mirror images of each other. So if you have two conflicting ideas on these trades or on these assets, then you probably want to rethink your idea and try and structure it in a more logical fashion. But that's just another tip for you guys. So now we're going to let this trade run. Alright, keep running. We got time. It's good to see our price is moving. Alright, so let's just run it back over here quickly, as I was not really paying attention. That's my bad. So straight away we've come into this session. Asia session has kind of trended down. Straight away we're going to be wanting to take out these like damn near equal highs over here, as that's induced liquidity into the market. The Asia high again, and before we enter our trade, we're going to want to see some sort of manipulation of this Asia low. And as confluence as well, we do have this mitigation block, and we do also have a very nice fair value gap down here that has not been mitigated. This fair value gap over here has been mitigated by this, and as we're looking for this low to be taken, we do ideally want, you know, it to tap into this fair value gap if possible as an extra confluence. So I'm going to drop down into the 5 minute as well. So bang, we get our fair value gap tap. Now we're waiting for some sort of fair value gap to be offered into the market before we take this trade. We do also have internal break of structure over here, and we do also have this fair value gap over here that has been filled. So now there's not really any selling power in the market. So we do get a liquidity sweep again of that low. But since there was no clean close below and there was a big wick out of it to the bottom side, that shows that we don't want to be down there anymore. Damn near a break of structure on here. Clean fair value gap being offered as well, so I'll be this is actually where I entered. And again, I will show you on the MetaTrader at the end of this video. So always put your stop below the low when you're entering your fair value gaps, because price can come down and wick you out and still close inside of this fair value gap. So now after this, we are targeting this high over here, and then we're just going to let that run. So we're going to go back into the 15 minute just for time's sake, and this is an entry that I didn't take simply because I already had this position still running. I also had this position still running, and I felt it was unnecessary risk on the table. There's no point in being greedy. You don't need to get every single entry into the market and just be greedy, you know, go about your day, have a good time. So I've seen a lot of people using ICT's OTE strategy to enter into the market, and I think it's great, don't get me wrong. So I don't believe that's even the high, actually, hold on. But I think it's great. I don't have anything against it personally. I just don't really use it. But if you did want to use it here, you can see it comes below the 50%, and then basically as soon as it's below the 50%, this is your premium, this is your discount. So as soon as it's below the 50%, it's pretty much viable for a buy. But one thing I do want to speak on is fair value in the market hasn't been offered. Like if we're looking at institutional market structure, we can see that we've had selling all the way in this area, and then straight away after that we've had buying all the way up to here. But whereas, you know, fair selling after this buying not been offered, it's above these highs over here, right? So specifically actually in this session, it's been right over here, above these highs right here. So due to this is why it stopped right there. And since straight away right there is where fair value had been offered, they were free to then move up and run the high. So I hope this is, you know, a good overview of why I took these trades last week. One thing I do want to say as well, and this will refer to my previous videos that I did a couple months ago on gold. Typically at the start of the week, you know, if we get like a high of the week run or something like that, and then there's nothing else really for price to run like you have in over here, there's not really anything else for it to run, that would typically just lead to sells in the market, because there's no more buy side liquidity for the market to take, there's only sell side liquidity for it now to take. So now it will go and hunt other things essentially. And also the DXY was bullish, which is the reason why this would have sold off. So I hope that adds a bit of clarity to your trading into next week.